and it is feeling a little witchy on the SPY. I'm just checking my NFTs. I haven't checked the NFTs over here to see what was going on with NFTs. All right, let me get the live stream up and shared on Twitter. Bright red on my lips today, ready for some red in the market. We'll see, we are green right now. IWM is just flat on the day. And if you guys have not checked out yet, not yesterday's video, the day before yesterday, I had problems with my mic, so I don't have the live stream up just yet, but I will check it in just a second. And let me tweet this out. Grab the link. Wrong one. Come on. Too many windows open. All right. And there we go. Let's get that live stream up and running. And let's, excuse me, move it on over. Move it on up to the east side, to a deluxe apartment in the sky. Moving on up. All right. So welcome, welcome. I hope you're having, hey Johnny, hope you are having a great day. I am coming on a little bit earlier. I have to go and prep and get some things for my soon-to-be 5-year-old's birthday on Wednesday. So yeah, yesterday, can you hear me, Johnny? Can you hear me? I hope you can. Otherwise, you'll just see my mouth moving and nothing else, right? Okay, so I do have my list at cjanetrade.com. I do post this every morning by 9 a.m. And will you guess when markets will dramatically collapse for whatever reason? Well, Steve, you know, back January 6th, Morgan Stanley said the end of Omicron is going to be done the end of January. Well, we are the end of January, right? And it looks as if we could be basing, but we would need to see a whole lot more in the dark pool for me to be convinced that they are buying right here. So right now, in a bearish motion, we are still below that 8 EMA over here on the daily. And if we look at it, let's put this on the weekly chart over here so we can get a better picture, right? So if we look at it, let's even do a monthly. Monthly is going to be even better. And we'll adjust it like this, right? No, that's not what I wanted. Right here. I want this adjusted. And I want this. Like that. So when we look at this, we can see, well, let's draw a little triangle here. Thank you, Johnny. I appreciate that. Right? We have this area right here, which we came down and we tested. And then we have another box up here, right? Let's bring it back. So we have, if we go below 428.88 with a close, bye-bye, right? On our monthly chart, we brought it down almost to the 15 EMA. If we look at it on a 24-hour chart, I might save these boxes. Yeah, I think I'm going to save these boxes on here. Hold on 2 seconds, bear with me. So yeah, we'll save that. So we can see we're sort of hanging out around over here. We were over here before, so kind of a double bottom, triple bottom. Is this going to be an M formation? And then we have a depth of 480 down to, we'll call this 426, 479 to 426, 53 points. Could we easily see this go down to 375? That's maybe, yeah, we could, right? If it had a quick drop down, we've already gone down 50 points. Could have a little bounce, 440, and then another 60 points. Yeah, maybe we're going to come down here, test this as a support, right? Maybe we're going to come down here. Maybe we're going to come down to 407. Definitively the exact day, Stephen. I'm sorry, my crystal ball is cloudy. Just like the snowstorm we are getting, it's a little, you know, there's a little congestion that's happening, some fogginess. The temperature dew point spreads just making it go sideways right in the moment for the market. But once we break out of this, so above 438 or below 428 over here, you can see we had a lot of buying wicks, right? Let's stretch that even more so we can see it better. So we've had selling wicks right here below the 200 EMA and below the 8 EMA, and we've had buying wicks. This is a 1-year volume weighted anchor price. So if we go back, let's go back here really quickly. So let's go to 21, double click, adjust it. So we are January 28th. I move this over 1 day, bring us back to today. And this is our this is our yearly volume weighted anchor price that's acting as support. If we drop below this, it could get ugly for the market. It could get really ugly. For the Qs, you know, I don't think I have a yearly one. Let's take this one and let's move it back to January 28th. There we go, January 28th, and we are below it. So the Qs over the past year, volume weighted anchor price is weaker. As long as we stay below 354, I'm going to be a bear on the Qs. Let's check out IWM. IWM is definitely bearish, right? Because I had this back here to February, what's the day? February 10th. Let's throw on another volume weighted anchor price from January 28th right here. Yeah, it's all the way up here. We are definitely bearish on the Qs, Qs and IWM. Remember, the Russell is 2,000 stocks. So this is a fair amount of the market, right? And when we look at this, if we go to the monthly chart, look at what's happened. We are even below the 24 EMA on the monthly. As long as we close below 196.93, full on bear for me in the market. And this is why, because we have had really 11 months of distribution. And I think we could potentially see the Russell go down to 172 down here to this trend line. I think we could easily see another 20 points. Remember, this is all my opinion. Do with it what you will. I'm not a financial advisor. I'm not saying go out and short anything. It's just my opinion, viewpoint, technically looking at these stocks. We had higher volume and it started to drop down. And right now, even it looks like on monthly, we could easily see it come all the way down here to 183.35, right? And we're at 192.51 over here. Let's pull this up. Let's look at the Dow Jones. So Dow Jones, we are on a monthly chart as well right here. We came down to that 15 and we bounced. Let's go to a 24-hour chart and let's check this one. Is this the year? Where is this anchored from? March of 2021. Let's bring it back to January 28th right here. And we are below it right here. So 3 out of the 4 indexes, we are below that volume weighted anchor price. We are below the 161, the 200 EMA. We are below a lot of big long-term moving averages. Let's check it on the weekly for the Dow. Remember, the Dow is only 30 stocks. This is one of the most easily manipulated. And look at this volume, 85 million shares. Let's give you guys an idea, right? It's really fun to look at this, right? And see volume right here, 74 million. Okay, that was the bottom, right? That was the bottom. Then we had 67 million and 58 million, right? So if we ignore this, this was still selling. And then we have buying 67 and 74. Okay, that's roughly 140 million, right? We look back here, 85 for this week alone. And then we have 40, so that's 120. And then 34 here as well, 170. We'll include this one because it's higher than the week prior. So we'll say 200 million potentially selling right up here on the weekly chart. I would look for the Dow to go down to at least 300 in my opinion. Hey Terry, welcome, welcome. So looking at this, this could really get ugly. It looks reminiscent, right, of the Dow back here. We had big drop, little rebound week, right? Big drop, rebound week. Hey, John. Oh, thank you so much. Yeah, like, share, subscribe, free education. Let's do something else for fun, right? This was the week of 18th of February. Let's go back to 18th of right here. Okay, so the second week we were below right here, right? So similar pattern, right? Below, bounced up to it, below, bounced up to that volume weighted anchor price. How much further did we go percentage wise? We'll say from right here. How much further did we go percentage wise? 29%. Okay. So if we're hanging out there and we go down another 29%, 243 on the Dow. Could go there, right? Be 140 points, a little bit less than 50%, right? Off of the top. That could happen. Evergrande's debt debacle is 6 times worse than Lehman Brothers back in 2008. And what do we have happen back in 2008 for the Dow? Let's look and see. Right? Best thing is to look and see how did this happen, right? How far did we go here? 53%. Whoops. Went from here down to here. The bottom. Come on, show me the bottom. Almost 54%. So if we were, that was more like a elevator down type, oh no, this is getting ugly, right? It's going to get ugly, in my opinion. I think there's a lot of people, Ray Dalio has been talking about this is going to be the worst market crash ever. The debacle in Evergrande is awful, and BlackRock is tied up into it. HSBC is tied up into it. There's a lot of big names that are tied up into it that have retirement funds for the U.S. So looking at that, it is not going to be pretty, I don't think. But you guys can be prepared for it. Hey, get ready for some bargain basement shopping. Do I think that personally it's done? Would I be buying this dip right here? No. As much as Kramer might be saying, all right, enough with this, like let's move forward and everything like that. No, I don't think that it is done in my opinion. But I could be 100% wrong, right? I've been wrong before in the past and I could be wrong again. Just seems like too much could be happening. Let's just check out DWAC really quickly. I am a fan of this, and they're due to be going live as of February 21st. And look, you can see we are hitting this volume weighted anchor price as support, 63.25. As long as it holds as support, I like it. I like it long, right? So looking at that, we are on the shorter time frame. We are in a little bit of a retracement bearish trend, but this could easily have another. So if we look at this as a 1 move, 2, and then we look at a bigger 3, right? We could see this percentage wise, point wise, was 36 points. So if we break out from here and we go 36 points, we could be looking at $100 or more, 105 for that next big move up, which would be roughly 47%. When it breaks out, right? This is when it happens. We had a bigger move. It got a little overextended, pulled back, and continuation move to the upside. The ultimate support volume of the volume profile right here is roughly $52. And the warrants as well are up on the day. Warrants only have 14 million, where a DWAC has 58 million in the float. All right, let's look at Apple. So Apple was on the list today, earnings, and it is moving up just about 90 cents above my price breakout area of 168. Hey there, old salt shaker prince. Did you change your name? Yeah, we are below. If Apple closes down below today, below 165, I think we're going to actually see a bigger bear move. Apple, Microsoft, let's check Microsoft. These are the bigger names. They did have earnings report. Look at this. This is my 335 simple moving average, and it's acting as a little bit of a ceiling. Also a 24-hour 15 EMA. I threw it on there because I was like, oh, this looks like it's actually working as a resistance or a support. So I'm going to put it on there. And we'd hit a trend line here in the past just at earnings and bounced from there. All right, then let's check out Google. Let's see. Google has earnings next week right here. I don't know how many people are using it for marketing still and paying for Google ads and stuff like that. Something else. If you guys, do you guys put it in the chat? Would you guys like to see the linking of Coinbase and Facebook? Anybody let me know, yes or no? Put it in the chat. All right. Let's see. Live chat, all messages. There we go. Okay, so let's look at MT. So MT also had a bigger move today. I'm clicking on the wrong screen. That doesn't work. So this had a bigger move today, but it's just sort of gone sideways. A lot of retracement, and I tried to give a lot of yes and no. Okay, we got to have a tiebreaker. Who's the tiebreaker? Do you guys want to see the linkage between Coinbase and Facebook? Yeah, or metaverse. Sorry, it's the metaverse now, right? So we had CCL, big drop down early in the morning. I'll put this on a 15-minute chart, a little bit easier to see. So a nice drawdown, 18.30, 50 cents down. These are very nice moves, right? Pretty consistently. This one, I tried to be conservative because it was hitting this and came down. Okay. So Yandex, oh, I forgot. I meant to say like USDC, coin, and metaverse. All three. All three are linked. Yandex today had a drawdown. We hit the 200 simple moving average on 43.20. And then UBS, a bank over here, not over here. I don't know where it is. I think it's in England. Had a bit of a retracement today, moving up, bounced. Then NEO has been following Tesla. So this one trades symbiotically to Tesla. It does look like we have sellers exhaustion going on and some buyers coming in. Are we going to bounce all the way up to 22.45 and then have a reverse right there? Potential. Tesla, big dark pool activity. We are below. So are we going to see that this is going to continue to break down? There's a good chance. There is a very good chance that we could see this break down further with this megaphone to the downside. We could come down, we could test down here 654 or 619 or all the way down to this trend line 585. I'd be jumping if it came down to that nice discounted price of 585. Jump on board. And as part of the S&P 500, that does have it is 2% of the holdings. So if this does draw down, it would affect the S&P 500 as well. My good buddy Jeremy posted a funny little tweet out today. Hood yesterday dropped 20% right as earnings happened. And it was funny showing the migration of the trash symbol. And then it was the app image for Hood was 2022. So yeah, Robinhood has been it hasn't been the nicest app for traders in the past 2 years throughout the pandemic. A lot of traders learned how to trade on Robinhood, but then likely said, you know what, this isn't the best. And so they moved forward from that. PG as well had bigger price movement to the downside this morning. And it had a nice little continuation move, reversal, nice doji sandwich reversal right here. Buying wicks, doji, once we overcame it, shot up and hit the 50 simple on the 15-minute. Do you guys have any others that you would like to check out? You can put it in the chat. We can go over it. Otherwise, I will head on out for my little errands for birthday planning. Got to make sure we have everything, right? So XLM, I like XLM. It seems like we're basing here, moving sideways on the 24-hour chart. Nice little consolidation right down here. Let's check and see. XRP as well, pretty much doing the same thing, just sort of going sideways right here. Let's check Doge. Same sort of thing. A lot of them are doing the same thing. right? We did have bigger movements on Bitcoin. Let's look at Cardano. Yep, Cardano, same thing. So I'd wait on these if you are looking to just enter. But look at all these. These are all doing the same thing. Palladium short. Are you talking about the actual metals, Johnny? Or is that a, you're talking about the metals or you're talking about XPD? Which one? Okay, let's check it out. The futures. Yeah, Stephen, I did do that one about NFTs. You're looking to short this? Currency? Okay, hold on. Is it this one? XPD USD Ohanda or the IDC? Type in which one. I know there's a 15-second delay, so I will chill here for a second. Okay. All right. So right here on the 24-hour chart, it looks like we are hitting a resistance, right? If we were to even put it on a weekly, it'd be easier to see. So I would look at 24.21 as my resistance. That's where it really had a battle in the past of the buyers and the sellers conflicting. Or if I were to get in, I would use that as my, this is my stop, right? I'm going to get out. You could be patient and wait until there. We've already tested this over here, overcome that. So I would look right here at that. So 24.10, 24.20 area. So that would still be another $40 away. And this is looking very bullish. Most metals right now are moving to the upside, actually. They're starting to see, well, at least in the physical market, right? The papers, not necessarily, but the physical is. So I would be extra cautious on that and I would check it out, but let's look on a shorter time frame. It depends on your time frame too, right? If we look here, this is a top. This would look like if this was a head and shoulders on 45 minutes, guess what? We've breached it and that's a bullish signal. We would be looking for this to break out to the upside because if it breaches the right shoulder, automatically this is set up. So if we had a head, shoulder, shoulder, head, and then a shoulder, you would look for it to stop right here, right? At 23.75. It's already gone above there. So it has already broken that shoulder. And it would be more of a signal of a bullish move and not a bearish move. We also have the moving averages, the longer term ones moving to the upside. So I would not personally be going short. I would wait until that 24.20 area. If it continued to move up above 24.20, that would be a strong bullish signal to me. If it reversed right there, that's where I would look to reverse it. AMC and GME, yeah, for sure. Let's check it out. AMC. So AMC, let's put this on the 24-hour chart over here. It's come down to a trend line, potential buying that's coming into it. So for this one, I would say if I were to get in, I would use the low of this candle, 1340. And it could potentially break out from here, but it's definitely in a downward trend, right? Overall, we have this very bearish trend. And if we pull that up, looks like if we broke above 1565, that 200, it could run up right here and then reverse back down. Let's look at this in the past. What has acted as resistance on the shorter time frame? So that 200 EMA. If it broke 1550, that's the trend line, the 200 EMA, that's where I would be confirmed that as long as it held it, it could test it. Like this was a test day. This is the third time on that moving average trend line. Is it going to break from here? Potentially, right? But it could also not. It could just continue down in this downward trend over here. All right, GME, more interesting to me, has a lower float, right? And with this has a fairly steep, I'm going to ignore this one right here, put it right here, right? So same thing, similar pattern. We had a very similar trading pattern to it, but I would look for this more to break above. Yeah, here we went up above, came back. You see how it held that as support? So I would look for that to be broken. I'd look for $100 to be broken on GME, and that could be a potential reversal. But it's the first test, right? Then you're going to have a test over here of 105, and that's also on the bigger picture over here, a bit of a consolidation point, right? So you'd want to see it really break out above all of this volume over here, 108.50 for a reversal. Otherwise, it's in a bearish trend. All right, Golden Boy, is it possible that the USD is feeling threatened, that Bitcoin could take over more and USD lose control? And that's why they are testing the system for it to be tradable currency on the internet. Well, Golden Boy, USD is not on, Bitcoin and USDC are separate. So USDC is on the Ethereum network. It's not on the Bitcoin network. The banks do not like cryptos. Why? Because people put money into it and it takes it out of their hands. We have fractional banking going on right now. That is the banking system that we have. You put money in, the banks use it to make money themselves. They lend it out. Banking reserve requirements were at 0 March of 2020. As far as I know, they have not increased that. So what do? When the money comes in, they lend it right out. The reserve requirements were 0. The interest rates were so low that they're making money off of your money. You go in and you want to ask for money, many times above 5,000. Could you order that, for tomorrow or, in 3 days? Because we don't have that in stock. We can't give out all of our cash. So they don't have a lot of cash on hand, right? And overall, the banking system is likely going to really just fizzle out and have a bit of a collapse, right? And move forward with a new one. On average, a fiat currency lasts roughly 100 years, and we are past that. If you read the Creature from Jekyll Island, it will help to enlighten you on that. But looking at banks right now, as much as they've been a safe haven in the past, because everybody thinks, oh, the banking system's just rock solid. Well, banking system is run by the Fed, right? The Fed has inflated the valuation of the dollar insanely. And we are coming down, we're testing over here. To me, it would have to be above 38.80, below 35. We're in no trading area. We've had massive dark pool activity on banks. So one way or the other, I'm not a fan of the banks. I try to keep assets versus cash personally, and store of wealth other ways than in the bank. Because actually that's one of the best things I learned from Trump, is to use the banks to leverage their money for you instead of the other way around, because they are the masters of using your money to make money. So figure out how one could utilize their money to make money, right? And we shall see. But Bitcoin is going to be separate from Ethereum, but the banks don't like cryptos overall. Central bank digital currencies through the central bank, where they can monitor transactions, they like, because then they have their hand in it to see where the money is going. So that's my thought on that. All right, I'm going to wrap it up for today. Have an amazing weekend. Carpe profit. Seize those profits one trade at a time, and I will hopefully see you all on Monday, given that everything is working. Had issues yesterday with my software, my broadcasting software. I updated it and it dropped my mic, so I had to do like 10 video attempts for Angela Miles for Business First AM, and it didn't want to record, and I was troubleshooting. So I will see you all on Monday. Have an amazing weekend. Spend time with friends and family. Love you all. Bye.